Trading alone is not the problem. Thinking alone is. This is where many traders get trapped, because from the outside, both look the same. Both look quiet. Both look disciplined. Both look like a person sitting in front of a screen, away from the noise, away from the crowd, away from the endless opinions of people who do not understand what it means to risk money in the market. And in the beginning, trading alone can feel powerful. You stop asking everyone what they think. You stop jumping from one signal group to another. You stop letting strangers on the internet pull your attention from one pair to another, from one stock to another, from one setup to another. You finally create silence around your process. You finally hear your own thoughts. That silence can become a weapon. But if you are not careful, that same silence can become a prison, because there is a difference between solitude and isolation. Solitude gives you space to think clearly. Isolation removes every mirror that could show you when your thinking has become distorted. Solitude helps you build focus. Isolation helps you build delusion. Solitude allows discipline to grow. Isolation allows your ego to talk without interruption, and that is dangerous. The market is already a place where your mind can lie to you. It can make a bad trade feel justified. It can make a missed entry feel like failure. It can make one lucky win feel like proof that you have finally cracked the code. It can turn fear into caution, greed into confidence, stubbornness into conviction, and revenge into strategy. Now, imagine facing all of that alone, with nobody challenging the story in your head. That is when trading alone becomes thinking alone. And the trader who thinks alone is not just alone physically, he is alone psychologically. He has no filter, no feedback, no honest voice, no system outside his own emotions. He starts believing every explanation he creates. He starts trusting every instinct, because there is nobody around to ask the simplest question. Is that really your plan, or is that just your emotion speaking clearly? Most traders do not blow accounts because they had nobody sitting beside them. They blow accounts because nobody was strong enough inside their process to stop the internal conversation from becoming a courtroom where their ego always wins. They take a trade they know they should not take, then they explain it. They move a stop loss, then they explain it. They over-leverage after a loss, then they explain it. They abandon the strategy after 3 bad trades, then they explain it. And every explanation sounds reasonable when you are the only judge. This is the cruel part about isolation. It does not always feel like weakness. Sometimes it feels like independence. Sometimes it feels like strength. Sometimes it feels like maturity. You tell yourself, I do not need anyone. I do not need opinions. I do not need community. I do not need feedback. I just need to focus. And sometimes that is true. But sometimes what you call focus is actually fear. Fear of being corrected. Fear of being exposed. Fear of admitting that the same mistake you made last month is still alive in you today. Fear of letting someone see that your discipline is not as strong as you pretend it is. So you hide behind solitude. You tell yourself you are protecting your process, but what you are really protecting is your pride. Think about this for a moment. When you are losing, who hears the conversation in your mind? Who hears the way you talk to yourself after a red day? Who sees the small compromise before it becomes a large mistake? Who sees the moment you say, just one more trade, even though the plan is already broken? Who sees the way you refresh the chart again and again, not because there is new information, but because you are addicted to the possibility of relief? If the answer is nobody, then your worst habits are growing in darkness. And habits that grow in darkness become stronger than discipline. This is why isolation is such a double-edged sword in trading. On one side, you need distance from the crowd. You cannot build a serious trading mind while letting every loud opinion enter your system. You cannot be consistent if your plan changes every time someone posts a screenshot of a win. You cannot develop patience if you are surrounded by people who confuse activity with progress. You cannot protect your edge if your attention is being sold to the highest emotional trigger. The crowd is dangerous, but your unchallenged mind is also dangerous. That is the tension. The amateur trader often runs from the crowd because the crowd hurts him. But then he runs so far that he loses every form of accountability. He escapes noise, but he also escapes correction. He escapes bad influence, but he also escapes honest reflection. He escapes comparison, but he also escapes standards. And without standards, isolation slowly becomes permission. Permission to bend the rules. permission to call impulse intuition, permission to call gambling confidence, permission to call fear patience, permission to call stubbornness belief. Before we dive deeper, let me ask you this. Are you struggling with fear, doubt over trading, or the constant cycle of knowing what to do but failing to do it when the market starts moving? I created my ebook, Master Your Mind, Master Your Trades, for traders who are tired of losing to themselves. It is designed to help you understand the mental traps that destroy consistency, the emotional patterns behind bad decisions, and the discipline needed to trade with clarity instead of chaos. If you want to start building the mind behind the strategy, you can check it out through the link in the description. Now, let us go deeper, because the problem is not that you trade alone. Many great traders do. In fact, every serious trader must learn to be alone at some point. You must learn to sit with uncertainty without needing reassurance. You must learn to enter a position without asking 10 people if they agree. You must learn to close a losing trade without needing someone to comfort your ego. You must learn to miss a move without running to social media to see if other people missed it too. Trading requires solitude. There are decisions that only you can make. There are losses that only you can accept. There is discipline that cannot be outsourced. Nobody can sit inside your nervous system when price moves against you. Nobody can force your hand away from the mouse. Nobody can make you respect risk when greed starts whispering that this one trade could change everything. At the moment of execution, you are alone. That is not a flaw in trading. That is the nature of it. But solitude must be connected to truth. It must be connected to a system, a journal, a process, a set of rules, and sometimes the eyes of people who can see what you cannot see because they are not trapped inside your emotional storm. A trader needs solitude for execution, but he needs feedback for perception, because perception is where the mind becomes slippery. You can stare at the same chart and see discipline or fear, depending on what you want to believe. You can look at the same result and call it bad luck or poor execution. You can review the same mistake and call it a rare exception instead of a pattern. You can watch your account slowly bleed and still tell yourself you are close. Close to what? Close to a breakthrough or close to another blown account. This is why the trader who thinks alone becomes dangerous to himself. Not because he lacks intelligence, but because intelligence without correction becomes a servant of the ego. The smarter you are, the better your excuses become. The more market language you know, the more sophisticated your self-deception becomes. You stop saying, I broke my rule. You say, I adapted to changing conditions. You stop saying, I was afraid to take the loss. You say, I gave the trade more room because volatility expanded. You stop saying, I revenge traded. You say, I saw another opportunity. The words get cleaner. The behavior stays the same. That is how delusion grows. It does not grow by sounding stupid. It grows by sounding reasonable. It puts on the clothes of analysis. It borrows the language of experience. It hides inside sentences that make you feel professional while your account tells a different story. The trader who thinks alone can spend hours reviewing charts and never once review himself. He can backtest for months and still avoid the question that matters. He can change strategies, brokers, timeframes, assets, and indicators, but never change the emotional pattern that follows him everywhere. Because wherever he goes, he is still there. This is the mirror most traders avoid. They think the market is exposing their strategy, but the market is exposing their relationship with truth. It is showing them whether they can face evidence without defending themselves. It is showing them whether they can lose without creating a story. It is showing them whether they can be wrong without becoming emotionally injured. And when you think alone for too long, being wrong begins to feel like an attack. That is when you stop learning. You do not stop consuming information. You may still watch videos, you may still read books, you may still listen to podcasts, but learning is not the same as collecting ideas that agree with you. Learning requires friction. Learning requires discomfort. Learning requires moments where something interrupts your favorite explanation and says, maybe this is not the full truth. Most traders do not want that. They want confirmation. They want someone to tell them the trade was unlucky. They want someone to tell them the market was manipulated. They want someone to tell them their system is fine, and the problem is just temporary. They want a community that feels like support, but functions like an echo chamber. And echo chambers are not always loud. Sometimes the echo chamber is one person. Your own mind can become the group chat. Your own mind can become the signal room. Your own mind can become the place where every bad idea gets agreement. because every voice inside it belongs to you. This is why self-awareness is not optional in trading. It is risk management for the mind. Just as you set limits on how much capital you can lose, you must set limits on how much trust you give to your own emotional interpretation in the heat of the moment. Because your mind is not neutral when money is on the line. It is negotiating. It negotiates with your rules. It negotiates with your pain. It negotiates with your hopes. It negotiates with your fear of being left behind. It negotiates with your need to recover. It negotiates with your identity as someone who believes he should already be further ahead. And when there is no external structure, the negotiation never ends. One rule becomes flexible. One flexible rule becomes a habit. One habit becomes your trading personality, and your trading personality becomes your results. This is why journals matter. Not because writing magically makes you profitable, but because a journal becomes a witness. It does not care how convincing your excuse sounded in the moment. It records what happened. It records what you said you would do. It records what you actually did. It shows you the distance between your plan and your behavior. That distance is where your real work begins. A trader without a journal is often a trader without memory. He remembers the big losses because they hurt. He remembers the big wins because they feed his confidence. But he forgets the small leaks, the tiny rule breaks, the emotional entries, the exits taken too early, the trades entered out of boredom, the stops moved by a few points. The risk increased just slightly because he felt sure. Those small things do not feel dramatic, but they compound. Every time you trade without recording the truth, you make it easier to repeat the lie. Every time you explain a mistake without writing it down, you protect it from being challenged. Every time you skip review because you feel uncomfortable, you teach your mind that discomfort is a reason to avoid evidence. And evidence is what saves you. Not motivation, not hope, not another strategy. Evidence, the market gives you data, but your behavior gives you truth. If you are willing to look at it, honestly, your trading history will tell you who you are under pressure. It will show you whether you are patient or simply inactive until anxiety rises. It will show you whether you are disciplined or disciplined only when the trade is easy. It will show you whether your confidence comes from a tested process or from the last outcome. But you must be willing to look. And sometimes you need another mind to help you look. Not a guru, not a signal provider, not someone who tells you when to buy or sell. That is not what this is about. You do not need someone to think for you. You need someone or something that prevents your thinking from becoming a closed loop. That could be a serious trading partner. It could be a mentor. It could be a community built around process, not screenshots. It could be a strict review routine. It could be a written checklist that you obey even when your emotions disagree. It could be a rule that says, after 2 losses, I stop. No discussion. It could be a weekly review where every trade must answer for itself. The form matters less than the function. The function is accountability, and accountability is not someone shaming you. It is not someone yelling at you. It is not someone making you feel small. Real accountability is a mirror that refuses to flatter you. It shows you the trade you took, the rule you broke, the pattern you repeated, and the consequence you paid. At first, that mirror feels painful, but eventually it becomes freedom. Because the trader who accepts accountability no longer has to waste energy pretending. He no longer has to build complicated stories around simple mistakes. He no longer has to protect an image of discipline. He can finally deal with what is actually happening. There is peace in that. Not comfort, but peace. Comfort says, you are fine, keep going. Peace says, the truth is painful, but now you can work with it. This is the difference between the trader who trades alone and the trader who thinks alone. The trader who trades alone may be physically by himself, but his process is not isolated from truth. He has rules. He has records. He has reflection. He has standards. He has ways to catch himself before emotion becomes action. He may sit alone, but he is not unaccountable. The trader who thinks alone has none of that. He is surrounded by his own conclusions. Every loss becomes a story. Every win becomes validation. Every emotional impulse becomes a private agreement. He is not trading the market anymore. He is trading inside a world built by his own interpretations. And the market punishes that eventually, not immediately. That is what makes it dangerous. Sometimes your isolation is rewarded. Sometimes you break a rule and the trade wins. Sometimes you ignore feedback and the account grows. Sometimes you convince yourself that your instinct is superior because the outcome agrees with you once or twice. But the market has a way of letting your bad habits survive long enough to become expensive. It does not punish every mistake immediately. It lets some mistakes pay you. It lets some indiscipline look like genius. It lets some reckless decisions create profits. And if you are thinking alone, you will learn the wrong lesson. You will not say, "I got lucky." You will say, "I knew it." Those three words are dangerous. I knew it. They can turn a trader into a believer in his own impulses. They can transform randomness into identity. They can make you trust the part of yourself that should be supervised most closely. Then, when the same behavior finally produces a loss, you are confused. You feel betrayed. You say the market changed. You say the setup failed. You say something is wrong with the conditions. But what really happened is simple. The bill arrived. The bill for thinking alone always arrives. Sometimes it arrives as a blown account. Sometimes it arrives as months of stagnation. Sometimes it arrives as emotional exhaustion, where you can no longer tell whether you are trading a system or chasing relief. Sometimes it arrives as bitterness, where every other trader's success feels like an attack, because deep down, you have been avoiding the work. And the work is not glamorous. The work is telling the truth. The work is reviewing the trade you do not want to review. The work is admitting that your plan was clear and you still broke it. The work is noticing that you only become aggressive after feeling embarrassed. The work is seeing that you call yourself patient, but only because you are afraid to enter. The work is recognizing that you call yourself independent, but sometimes you are just isolated. There is a difference. Independence means you can stand on your own process. Isolation means your process cannot survive being questioned. That single difference can decide your future as a trader. A serious trader does not fear questions. He fears unexamined behavior. He does not need everyone to agree with him, but he is willing to test his thinking against reality. He is willing to be wrong quickly. He is willing to let evidence correct him before the market charges him more for the lesson. This is not weakness. This is maturity. Immature traders think accountability limits freedom. Mature traders understand accountability protects freedom, because the freedom to trade without rules is not freedom. It is exposure. The freedom to follow every impulse is not freedom. It is slavery to emotion. The freedom to ignore feedback is not freedom. It is the slow construction of a prison you cannot see until the door closes. Real freedom in trading comes from constraints. Risk limits give you freedom from catastrophic damage. A plan gives you freedom from constant hesitation. A journal gives you freedom from selective memory. Review gives you freedom from repeating the same mistake blindly. Honest feedback gives you freedom from self-deception. This is why professional behavior often looks boring. It is full of boundaries. It is full of repetition. It is full of checks that prevent one emotional day from destroying months of work. The amateur sees this and thinks it is restrictive. The professional sees it and understands that without boundaries, the mind becomes the risk. The market does not need you to be surrounded by people, but it does require you to be surrounded by truth. That truth can be quiet. It can be written in your journal. It can be stored in your rules. It can be spoken by a mentor. It can be reflected in your statistics. It can be carried by a trading partner who asks the question you do not want to answer. So ask yourself honestly, are you trading alone because your process requires focus? Or are you thinking alone because your pride cannot tolerate truth? Are you protecting your discipline from noise? Or protecting your excuses from accountability? Are you building solitude? Or building an echo chamber with your own voice? The answer matters, because the market will not ask you which one you are. It will simply reveal it. Trade after trade, rule after rule, review after review, loss after loss, win after win. And eventually every trader must face the same question. When no one is watching, and your own mind starts explaining why this time should be different, will you believe the voice that protects your ego? Or will you obey the truth that protects your future?